Hey, happy Saturday, everyone. Hope you had a great week. It was an interesting one for sure. We're going to get into that, what happened and what to expect for the coming week. But first, some disclaimers. This is not investment advice. Trading is really hard, and I am frequently wrong. So do your own due diligence, trade your own analysis and convictions. But for educational purposes, maybe you can add something from my process to yours, and we'll move forward. But let's go ahead and start getting into what happened. This week, we obviously closed way below the previous week's close. This is what we're looking at as a weekly SPX chart here. So pretty ugly weekly candle, obviously bearish. If you're a technical analysis guy, as you can see, I'm not huge on real complex TA. I have a really basic chart in front of me. I like to keep it that way, keep things simple. It's also easier for me to explain things and show you on these videos if it's like that. So you might remember from last week's video, I mentioned that 4550 SPX and 4500 would be strong levels. We had a gap, which I've since deleted. Once, again, I try to keep things as simple as possible. This gap from here to here got closed over here, I suppose. It was at about 45.20, I believe. So one of those is gone from last week. So if you watched the last video, you would have seen a little line there. I deleted it. So obviously, trend has shifted down. We did have a pretty strong showing at the close on Friday, but it wasn't strong enough for me to really be convinced that we are going to see any sort of trend change. I'll get into that in a minute. But first off, you can kind of see we were all there. I thought that we would drop on Monday. I thought we'd have more panic down to here. This is a 60-day moving average, by the way. I won't get into why I use that instead of a 50, but I believe the 50 is somewhere in the same vicinity at this point, obviously. So I thought this Monday candle would have gone down here. It did not. It actually went up, made a higher high, and kind of tricked a lot of people and rolled over again, and we got into this mess where it did actually hit the supports I mentioned on the last video. So I was wrong about timing, but right about structure, I suppose. I don't really care about being right or wrong. I just want to have a good idea, a good roadmap. That's all there is to it, and I can trade. Now, I say the trend is down, and it is for now. It's a short-term trend, but we got to remember what you're looking at. This is let's zoom out on it just to give you sort of an idea. We're in an uptrend, okay? Long term, we are in an uptrend until proven otherwise. So, you still kind of have to give the buyers the benefit of the doubt. And I'll get into why, sort of the bull case, and I don't really need to get into the bear case because you can go on Twitter and find the bear case everywhere. So, not much to it. We'll just look at reality for now. Nothing changed within the structure of the options market over the last week. SPX, the biggest call level is still 4,700, and the biggest put level is still 4,400. Well, it's actually 4,000, but as I mentioned last week, we're not even going to think about that. Let's get into the chain real quick. I won't get too deep into this. I'll just give the basics. If you don't understand this, open interest is important in the sense that these will, on the call side will serve as a resistance level. On the put side, it will serve as support. So you can see the open interest. This gets updated daily. Volume is updated throughout the day. You can kind of keep your eyes on that. It's very helpful intraday to take a look at what is going on, who's buying what, who's selling what, and so on. Now, there's something interesting here is the 4,500 level is starting to catch up with that 4,400. So that could be interesting and could serve as support. This is where we bounced from Friday and also Wednesday. So it created a nice snapback rally, which I'll get into in a sec. But anyway, still we're looking at 4,700 as being pretty much insurmountable by December 17th, which is what I'm looking at. I'm only looking at the monthly options. I don't care about the weekly options on these. I will look at the Monday, Wednesday, Friday weeklies on SPY on an intraday level to get an idea of where we might close that day. But it does not dictate trend at all. This does. Another good resource for this, and I actually have an app on my computer. I love this website so much I created an app. This is maximum-pain.com. Here at their main page, if you go to it, you'll be able to see that they have some videos on there about how to read this. But if you look here, this is the December 17th options. Like I said, it's the only ones you really want to look at on SPX. SPX, again, if you don't know this, is the big boy. Everything else is derivative of SPX. SPX is where all the money is. SPY is what we trade, or I don't trade it, I own it and hold it. I trade ES, which is S&P futures, but based on SPX movements, okay? Because ES, SPY, whatever you want, SPXL, whatever you're trading, is a derivative of SPX, okay? So this is your main thing. All right, so this is showing us the max pain is 4,500, which happened to be where we closed basically on Friday. That will be sort of like a magnet for price. In 4,700, again, highest call. I told you highest put is 4,000, but again, I don't care about it because it's too far away unless we just get out of control. But you can see 4,450's got some good open interest. I showed you all that. And then the 4,400. So expect to be somewhere between here and here on December 17th, which isn't very helpful, a 300-point range to play with. So now you got to go back to intraday stuff. So for that, I'm going to go to ES because it's a lot easier to read on intraday because it shows the overnight stuff. SPX is something I look at for daily, weekly, so on and so forth. Sorry about that. I got to zoom in. All right. And let's start with a 4-hour chart. This is sort of going to give you your trend, and it was very reliable this week if you were a bear and selling. Here's Monday. We had that big face ripping rally. Obviously, everybody's really excited. Everybody's bullish. We bottomed, so on and so forth. I was feeling pretty wrong on my prediction that we would get down here. We hit this 60-day or 60-period moving average, so 240-hour moving average, we should call it on this chart, and we rolled right off of it. And this 200-day is this white line. Did a pretty good job of holding it for a minute, but not really. And we touched it again on Wednesday morning, and look at that. Boom. Everybody's really excited here. Calling bottom again. Boom. Dead. We did hit that big support level that I talked about last week. We bounced off it pretty hard, as one would expect. But do you remember, if you watched that video, you might remember me talking about W's during downtrends for buyers versus V's. You're used to V's during uptrends, but when the trend shifts, you start seeing these W's, and that has played out big time this week. Here, look at W. Here, look, a W. And what we've seen so far is these W's form up, run into resistance, and get killed. And so really, if you're going to be a seller in this market, you can just watch this line. I mean, it's been pretty simple. A 4-hour chart with a 60 or 50 period moving average, they're probably about the same. And yeah, these are pretty safe trades, really. You're just putting your sell order here and stop short slightly above it, and goodbye. Making money. If you're buying, you're watching these. Probably you're buying the second leg, the other side of it, and with a stop below the first side, or maybe you're buying the stop level, which sometimes that happened big time on Friday. I'm going to show you that right now. I'm going to go all the way down to 10-minute. Okay. Now you see when we popped this, it immediately ripped. Okay, that is a stop run. Okay. Everybody's in their dog's stop was right below this 4,500 level, and it was struggling here, and then popped it. Boom. They're feeding liquidity right here. This is where everybody's looking at one level. I talked about this before. Everyone's looking at one level. There's too many buyers and not enough sellers, so they got to go find sellers to fill large orders. They pop it below, fires off. If you had your stop down here, I'm sorry, but you should have known better. So you're playing these W's, and you're actually buying those stop levels if you're wanting to be super safe. But just keep in mind you need to have a stop below that, just so you don't. If this continued, hell, you would have been. This thing would have dropped. Had this continued here, this would have dropped another 50 points within minutes. Sorry, but that's reality in this market. When you have the VIX running as high as it is, it's above 30. Expect these wild ranges. So you have to be super patient and not overtrade. You need to be to know your spots and be confident in one way or the other, and control your risk as well. So I'm going to go back a little bit to the 4 hour. So I would say if you're looking for a reversal, I'm not going to trust any rally until we're firmly above this 46.50 level. I posted that on Twitter many times. And when I say firmly above, I mean closing above, holding above there. This trend is not shifted until that's the case. Let's call it that. And that level is starting to move down. If 4,500 breaks, you're going to start looking at, say, this level as being the breakout level, 4,600. But I mean, if we continue down, which I suspect that right now you kind of have to give the benefit of the doubt to the sellers because they've been pretty aggressive at these levels. So don't trust any rally. Expect that when it's here, you're taking profit and then maybe re-entering if we can rally back above these levels. You're just going to give up 50 points or something like that and just call it a day. But that's better than losing. Okay, that's better than being all excited right here and having your trade wiped out. Okay, so that's kind of what I'm looking at this week. Now I'll get into the bullish factors. Like I said, we all know the bear factors. Back to the daily here, I want to look at volume. These 4 days last week were the heaviest volume we've seen in some time, and what has been a pretty complacent market. You see these low volume periods, that's a sign of complacency. That's just, okay, it's dipping, I'm going to buy it, and go up, whatever. Nobody really cares at that point. And so a complacent market is due for a pullback. That's what we saw. We're coming down, and now the volumes come back in. So this is a bullish factor. Some people look at that and say, no, that's bearish because everybody's selling. Well, not really. If the price is not really moving, and as aggressive as these moves have been, it's not that much. I think we're like, what's 200 points on 4.75%? Something like that. 4.5% off the high, 6%, somewhere in there. So that's not that big of a deal. With this much condensed volume in this zone, if you look at the range on these 3 sticks, that's kind of bullish actually for the intermediate term. So just that's one bull case right there. I think we call that, if you're doing volume analysis, you're going to call that opposing force. Okay. Supply and demand dictates that prices will rise until they meet supply and drop until they meet demand. Well, volume is a sign of one or the other. Okay, and I found that during uptrends, large long-term uptrends, actually the lack of volume is what creates pullbacks, and then volume kicking in is what creates bottoms. So that's opposing force. Okay, now. So that's bullish. The other thing that's extraordinarily bullish to me, and you're going to see my iTunes, excuse me. Here we go. This is squeezemetrics.com. Love their site. They do a great job of compiling data. What they look at is dark pool indicators, which is essentially just off-exchange trading done by large institutions. They agree on these trades off the exchange with counterparty banks. And they don't show up in volume, so you can't see them. Well, anyway, when the DIX, the DIX is rising, that means that these guys are buying. These guys are creating these trades off exchange, hiding it from you while the market's going down. That's when they buy. They buy low, sell high, right? So that's rising. Meanwhile, this other thing they have here, the GEX, this is gamma exposure for the banks, for the market makers. When this is dropping, it creates sort of a low liquidity environment. And so when you have the right people buying and low liquidity, markets can go up very fast. So that is a bullish indicator to me that these two lines are diverging with price diverging. Lastly, there's one more element to that equation, and I'm going to pull it up right now. VIX. We all know about the VIX. So I'm going to pull up a chart on the VIX. Now, first off, the VIX in absolute terms is sort of meaningless. It's just a mathematical equation. So you don't say, oh, well, the VIX is 30. It hasn't been 30 since back then. And oh my gosh, look what happened. That's dumb. Okay. All it is just an indication of how wild the range is going to be. Okay. That's it in absolute terms. Technical analysis on the VIX is ridiculous. You don't do it. Now, you can use it in saying, okay, I know that because it's 30, the range is going to be wild. And then, for that matter, when you get into a daily, this is a 5-minute chart. I like to use a 5-minute chart on the VIX. The chart does matter intraday. Okay, so think about the open is 0. If it's 0 to open, and then looking at it in relative terms throughout the day, this can dictate price movement. These movements, market will likely drop when this is happening. When this is happening, market will likely go up. That's all there is to it. It's very simple. So, but in absolute terms, we need this number to go down for the bulls to get it really excited, because that will feed into that other equation with the DIX and the GEX being diverging. If this can go down, liquidity will dry up big time, and that can create a super fast rally, and which would be great for bulls. That's what we need. If this continues to climb, sorry, we're going to continue down. That's that. So anyway, that's what I'm looking at. I hope you have a great week. This video might have run a little longer than I would have wanted, but it was an interesting week. We needed a longer video. But I hope you guys can use some of this, and have a great week. Best of luck to you. Go ahead and tweet at me or anything like that with any questions. I'll put the link on my Twitter feed. All right. Have a great day.